Okay. How you guys doing? This is Dr. Greg McLeod here. Welcome to the Thursday Power Hour here on the live Forex day trading room. Hello. Welcome. How you guys doing? This is Dr. Greg McLeod all the way from Las Vegas here coming to you for today's Thursday Power Hour. This is where we go into technical analysis, learning about how to use Fibonacci retracements and how to find low risk, high probability trading opportunities. And it's so good to be with you here on this Thursday, uh, the 20th of February, 2025. And I'm just gonna make sure I'll do a quick sound check and video check. Make sure that you can hear my voice and see my screen or see my picture there. And we're going to go ahead and get ready to get started, get our trading room in for our Thursday Power Hour, and make sure that they can see what's going on. Okay, and so I hope you guys are doing great out there. Again, a quick sound check, video check. I wanted to welcome all the new people to our live Forex Day Traders Den. That's our Facebook group, our free Facebook group. That is, we have a growing number of new members learning how to use short-term day trading to escape their long-term rat race corporate trap that they're in. Get free, learn how to trade and get free. That's what I always say. But let's go ahead and make sure. Welcome to Fibonacci secrets. And I hope you guys are doing great. Again, welcome all the new people have signed up, and we're growing by leaps and bounds. Also, those people who are watching me on YouTube, and big greetings to you as well. All right, let's go ahead and post this. And awesome. I hope you guys are staying warm where you are. It's a beautiful 68-degree day here in Las Vegas. And I know that it's cold in my home state of Texas and around the country. So stay warm, stay safe, and love each other. Okay. So today we're going to be talking about some Fibonacci opportunities. I want to do first a little bit of a house cleaning. I want to make sure that you know that coming up in March, the first week of March, we are going to start our scalping Forex challenge, where I'll be trading live for 2 hours a day for 2 hours, and you'll be able to trade alongside with me. And DM me if you're interested. We want to have a good number of people. Do a quick head count. Spaces are limited, so make sure you DM me that you're in the scalping challenge, the March Madness Scalping Challenge. Okay. So make sure that you reach out to me on that. In that challenge, I'll be trading. Again, you'll be able to look over my shoulder, see how I'm entering and exiting trades. You can ask me questions during the whole trade-a-thon, the March Madness trade-a-thon, and you can go ahead and actually look over my shoulder. I've been doing this for 30 years, and so I make money on demand, and it's a pretty cool thing to see. We usually have it every year, so I just want to make sure that make you aware of that. Make sure you tell your friends. Again, it's going to be for a 3-day challenge. It'll be this $97. And so again, reach out to me directly if you are interested in joining. Spaces are limited. We're going to just keep it small, keep about 20 people. So 20 people, and after we get our 20 person, the door's gonna be shut. So make sure you get your seat. We're probably gonna start doing the second week of March, and we'll start trading for 3 days. We'll do 3 days during the Asia session. I know it's not a very popular session, but I'll show you how we actually crack the code on that. Okay. Let me go ahead and make sure I can pin this to featured so people can find me. And if you can hear my voice, type a number 1 in the comments below, and also interact with me as well. I'd love to hear from you. I periodically do some challenge accounts. I do some small accounts and scale them up. I have some big accounts I scale up too. It doesn't matter to me. I use my proprietary trading strategy, but I want to share with you, if I can, and I most certainly can, I'll share with you what I did just in 1 day of trading, and I'll give you the percentage of that as well. Let me go ahead and share screen too, and we'll share it. We'll share some sound too. All right. All right. I'll let you go ahead and see that. And this is our preferred broker, Ox Securities. If you'd like to get a code for a special pricing, also reach out to me if you want to find out the broker that I use. Okay. So let's go ahead and start. I funded the account with $400 on the 20th. So I did that today, guys. A deposit of $400 cash money. This is not a demo account. This is a live account. And then my first trade, I made $136 my very first trade. So you can imagine making $136 on a $400 account, right? I mean, that is a tremendous amount of return on investment. You're talking about making 34%, right there, right? Making that up, right? And then we continue to scale that account up, and we closed our trade $338 in one day, right? Again, we were trading one standard lot, and you can see our equity curve very on the uprise. Notice something here, though, guys. Notice there's no negatives, okay? The Pip and Run strategy is a 90% win rate strategy. I know it's unheard of in the industry, unheard of in the business. Again, I've been using this strategy for over 25 years. And so we have this strategy that we can get in and out of the market without any losses. And this is a live account, right? And so I put $400 in, and we basically made $338 in one day on a $400 account in just a matter of minutes. And if you take the 338 and divide it by the 400 that we put in there, that comes out to 84%, an 84% return on investment, 84% in one day, guys, 84%, 84.5% to be precise, 84% in one day. Not too many people are doing 84% in one day with 100% win rate, with a 100% win rate, guys. Right. And so, again, relative drawdown, 0. Okay. So if I wound up doing a challenge and they had me a 6% or 5% drawdown, well, guess what? I don't have any drawdown. My drawdown is 0. My maximal drawdown is 0. My expected payoff is 18.78. Profitable trades total 100%. 18 wins and no losses. Okay. So that's just day one. And we actually, we're starting day two. And so we're going to look at scaling this account. Okay, we scale up to about, $2,000, and then that's a pretty good deal, right? That's a 500%, five-fold return on investment. And that's what I teach my students to do. Students like Brock, Dirk Brock, and Dirk is one of our, he's able to double accounts, he doubles accounts on a regular basis, he doubles the Social Security check, and just straight wins, right? So it's not just me doing it, it's not just me being able to make big gains in the market, but it's also my students can do so as well. So again, just want to put that out there for you guys. And but I really want to talk to you about how I'm going to show you how we can actually make this happen for you. As in fact, Dirk has some wisdom here. He calls his account the grocery getter account. More example. You go back here. Here's an example of slowing it down just a bit. Yesterday, I used a $900 account. This is Dirk from Henderson, beautiful Texas. $900 to make $557 in one day, 2 trades on a few lots, 0.1 lots. And so that's what he was able to do, right? So that's not that bad, right? It's a pretty good deal. So if that's something that you want to learn, something that a skill set that you want to learn, because it's a school, which means you have to learn something. And so just like you enroll in a school, there's stuff for you to do. It's not get rich quick. But if you want to learn how to do this, then you would want to enroll in Elite Chairs University, or at least find out more about it. You can go ahead and type, teach me teach me in the comments below, and we can have a call. Okay, it's it's not free, it's not cheap. Just like my mentor Mark Douglas, when he trained me back in 2000, he was $7,000. He was not cheap. He was not free. And don't worry, it's not going to be $7,000. But what I learned from him was priceless, right? It's not like you're going to a school and getting a bunch of debt and not being able to do anything practical with it, right? Right? You go to some school, you learn some trade, now you've got this big debt. But I help students get big money, funding through Apex. In fact, one of my students, Jamie, just passed 5 prop accounts, right? Daniel's there, a $50,000, right? You got a $50,000 account using the strategy, right? And then you've got Kenneth Ragg, $75,000 from Apex Funding using this strategy. And then you also have, James Rogers, who's gotten 4 accounts, right? So these are people who have the real people who have passed Apex funding challenges and using my method. Jabril King with a whopping $150,000 trading account, right? Using this system, right? And I'm going to show you one part of the system, and that's a part of the system uses something that everyone seems to use, which is Fibonacci. And many people are interested in using Fibonacci and how to actually master it so you can actually get some good results. So I'm going to show you how I use Fibonacci and how we can actually find some real life activity or real life examples using Fibonacci, right? So let me go ahead and go to, let's go to maybe Trading View, maybe. And let me stop sharing. And let me know if you like that in the chat box. Show me some of the 555s in the chat box. Let me know that you resonate with what's going on and what the great work that we've been doing here. I've been doing this for 10 years, training people how to trade the markets. I've worked at one of the largest Forex broker dealers in the world on Wall Street. I was a former Wall Street currency analyst and I taught middle school, high school, worked in the inner city, teaching young people how about the markets to stay off the street and make money. And now I teach adults to do the same. Okay, let me go ahead and we're trying to get here. Share again. Share. Get my share my other screen. And we're going to okay, share that, right? And let's fit that. And let's go ahead and we'll put the trading view, right? Let's do it, right? And I love been using the pound dollar. Let me show you what I've been doing with the pound dollar, right? Super charts. Love cable. And let's and what I like using when we trade, we always use two time frames side by side. But for this case, we're just going to show you one, and then I'm actually going to use the one pane, and let's go ahead and I usually use Heikin-Ashi candlesticks, but I know you guys are used to standard candles. So here's our candle view here. And so this is, I'll show you what I did. I trade all pound dollar. When I usually trade, guys, I usually try to focus. I think one of the mistakes that traders fall into, the trap they fall into, is trying to trade too many things. They're all over the place and they're looking here and they're looking there instead of focusing and being a specialist and being very good at just one currency pair. Think of Kentucky Fried Chicken, right? You don't know them for tacos or hot dogs. They do chicken right. They just do chicken. They got chicken strips, chicken nuggets. They got original recipe. They have crispy and finger looking good. Just chicken, right? And he's built $1 billion empire just on chicken, right? And there's some people that do other things. Maybe you have a Jack in the Box. They have tacos and burgers and things like that. But pretty much they stay in the same kind of range. Become a specialist at one thing and not try to do too many things. And that way you can learn with Forex or with trading, with trading stocks, commodities, whatever. Get good wherever you're trading. Just NQ, focus on NQ. If you're focusing on S&P 500, then S&P 500. But I like the pound. And the pound has been pretty good and has rallied up and done a lot of things. So what I did is I just traded the pound, right? And I was looking for a couple of things. I wanted to see an established trend. I always like looking at my 4-hour charts. I love looking at my 4-hour chart. I'm gonna remove all these drawings here and to start a clean chart. I want to start my 4-hour, right? And the 4 hours are called dealer charts. When I worked in the industry, when I worked for one of the largest Forex broker firms in the world, or Forex broker firms in the world, we focused our analysis on 4-hour charts, which are dealer charts. And we can get a very good understanding of trend looking at this 4-hour chart. We can clearly see that in an uptrend, we have higher swing lows and higher swing highs, and we have an uptrend, right? We have an uptrend. And I like scalping. I like something what I do is called trend scalping in the direction of the trend. Now, in this trend, you're going to get these pullbacks. What we try to do is the old Wall Street mantra. We want to buy the dips, but sometimes we end up being the dip because we don't know where the dips are, right? And all a dip is, to put it in just regular terms, is a discount. We want to buy at a discount. So there's a couple of things that help me buy. If I have an uptrend, I want to buy at the discount. I don't want to buy full price. I don't want to pay the top of the candle there, right? That's where something called FOMO exists. FOMO stands for fear of missing out, right? You see it moving up and then you enter long and your name is tattooed at the top of that wick and it drops and drops and drops and you're stopped out or wiped out, right? You want price to come to you, right? And you've seen that. Maybe you lived in New York or someplace where there's an auction. Maybe a lot of the South American countries. You go, they have these open markets. They don't have prices stamped down like we have in the U.S. And so everything is negotiable, right? You want to buy this for $1? No, they'll buy it for 85 cents. No, 85 cents. No, I get that's too cheap. You give me 95 cents is a deal, right? And so they're negotiating for everything, right? They never pay full price. It's all called it's negotiation. So when you see prices move, you want to say, look, after a big move like that, I want to get a discount. And the Fibonacci levels are those levels of discount. The 38% retracement, the 61% retracement, 76% retracement. So we go over in TradingView or whatever platform you're using, you're going to find some drawing tools called Fibonacci retracements. You click the retracement. What you want to do is find an established low and established high, right? So let's say you're looking at price here and you're like going, oh my goodness, price is up here. If you buy this, you're probably going to get screwed. Price is going to drop and you're going to not feeling very good. But you see, look, a big bullish candle. You buy the candle and boom, it drops, right? So what you want to do is once you see a big candle, that's fine if you miss it. Got to get comfortable with missing the move. Missing the move is okay. Missing the move is okay. Give yourself permission to miss it. You will miss the move, and that is fine. Why? Because like we used to say on the desk, there's always another train leaving the station. There's always another opportunity to get into the trade. Just wait, and the price will come back to you, okay? So, and that's what we do. If we have an established low point, I'm going to put a circle on that to mark that. People say, where do I start it? Well, you find an established low. That's our established low. I'm going to put an arrow on it too, right? Because you're probably looking at your phone and you probably can't see it, right? And you really shouldn't trade on your phone anyway. You should. Except Dirk. Dirk can trade on the phone because Dirk makes money, yeah, right? And Jeff. Jeff makes money too, right? They're military guys. They make money on anything. I like having a big screen with lots of data. I'm the jitterbug kind of like, I want to see big buttons. I want to see it big. So I got an established low. Here's my established low here, right? So it's my established low. We say the market put a low in, right? And the market put a high. We put a high in, right? And you don't want to buy that. You don't want to buy that. That's like a fish, like a bait on a hook. You see the big candle and it wants you to bite. And when they bite you, they caught you, right? So that's your high. That's your FOMO high, right? Because what happens right away? You buy at 122.97 and boom, it came down, down to 122.00, almost 100 pips, right? And meanwhile, you're stopped out, you're angry. But if you just waited, what will happen is this will unfold back down to this Fibonacci retracement. Let me make this bigger. I'm going to get rid of this. We don't need that because we're going to be on pound dollar for a while, right? So get that big candle like that. Got this really big candle. And now we're going to wait. We draw our lines. We're looking for a pullback to one of these numbers. Either it could be, if it's the strong trend, it'll only go to 11%. This is a 23% retracement, right? 122.56. This is a 38% retracement, 122.28. Retracement just means a pullback, okay? Discount. Think of it 23% off the high, 38% off the high. I make that red because that's a level where price often visits many times. So in my settings, and I can show you, in my settings, I have made that 38% retracement red. So it stands out for me. I click OK. So price rallied here. I expect it to come back down here. And let's see. Price. I've connected the high, I got the low, and now it's moved one bar ahead in time. 4 hours later, whoa, whoopee, look, it dropped, right? And look, it dropped through the 38% retracement, okay? And it stopped at a whole number, round number. We talked about round numbers being support and resistance as well. Price got to the 1.2200 area. So 00, that's a great discount. If you bought it here for one spot 2300, you would have overpaid. You've overpaid by 100 pips, right? And now you're in the hole. Oh man, I wish you would have come back. You're hoping, wishing, praying that price would come back instead of you kept your powder dry, right? You keep everything dry. You don't shoot your wad out, and then you wait for the pullback, right? And now it's in your sights. Now it's in your sights. You want to look at pulling the trigger at this area because it's a good level of support. Now it could go lower. It could go 618. It can go 786, right? It's kind of like the green eggs and ham Sam I am. I don't like green eggs and ham Sam I am. Do you like it in the drain? Do you like it on the train? It can go to different lines. But at least this gives you a frame of reference so you can see where this could possibly go, so you can be on the ready to pull the trigger to get long, right? So here's your pullback, and we've got a bounce, a candle bounce, like a harami. We have a full body candle red, small body candle, a bounce from the 2200 area. 2231 is where we are, and if we got long there on that candle, we'll see what happens next, right? Now, where was our stop and limits and things like that? We look at the neck. We can use Fibonacci as a way of protecting our position and reducing our risk, or protecting our account by placing a stop maybe 3 or 4 pips below the last fib, right? So if we got long here, then the next fib, we have the 50% retracement right there, and maybe we could split the difference and put it between the 618 and the 50% retracement as a way of seeing where our stop would be, right? And then you calculate what's your position size. You have to do that calculation. It's a very complex calculation. It's not very complex, but it will vary depending on what your account is. If you have $1,000 account, you should have a different size position. Now, the way I did it when I took my account from $400 to $700 or $730, I was over leveraged, okay? And I was over leveraged because I had a lot of confidence. some of the trade setups I was taking with Pip and Run, if you're trading at 90% win rate, you can have an inverse risk to reward. And a lot of people don't understand that. They don't understand that because they don't think it's possible. And so therefore they don't actually teach it or talk about it or actually do the math around it, right? So if you have and I can show you a chart on that. When you have, right? So when you have, and I'll show you this. When you're the average trader, their win rate is going to be like 30%. So they got to look, in order to make money, they need a 1 to 3 when they can win only 3 trades out of 10. And most traders are in that 3 trades out of 10, right? But as you increase your accuracy, you can have, if you are right 60% of the time, you can make money with a 1-to-1, or a break even at 1-to-1, right? And then if you get into the 80-90% area, well, guess what? You can be profitable at, with an inverse risk to reward, right? You're profitable not only at 1-to-1, 1-to-2, 1-to-3, 1-to-4. You are very profitable even if you have an inverse risk to reward. The problem is that people are not that accurate. Your win rate is not that good, so you'll never, ever get into this area unless you have an advanced system. If you don't have an advanced system, if you use just a regular one-of-the-mill ICT or whatever system that's out there that everyone's using, well, then guess what? If you can get 1-to-3 on that, you will make money at it. But psychologically, can you mentally handle losing 7 trades out of 10, right? Probably not. When my students can hit 80, 8 out of 10, 7, 8, 9 out of 10, 10 out of 10 trades, how do you think they feel about themselves and about trading? They feel really good and they're not under a lot of stress, even though it's not particularly stressful that, okay, I don't have to win because I know if I lose 7, I'll win 3 eventually. And those 3 will make up for my losses. And that's what you hear. But if that's one reality, if you want that reality, it's already out there. But if you're here listening to me and you know what's possible and what I've shown you, well, then you can be over here in the green zone, right? And have a higher win rate, taking what would look like a high amount of risk, but it's really not that great a risk, okay? So let me get back to here. So, but still, if this thing turns around, we really don't want to be in it. So we would look maybe somewhere in between, again, the 2 Fibonacci's, the 608 and 50. Whatever entry you are in, look at the next 2 fibs and look at that as your stop. Calculate your position size. By looking at the size of your account and the size of the pip. So you can actually take one of these tools here and you can say, okay, let's say we've got our target and we look for maybe, I'm gonna move this out a little bit, move our stop into the area between the 2 here, and then our risk to reward. I mean, we have a really good risk to reward here, right? Right. We have right. Can't see it. Okay. Okay. So actually, we are. If we had it be in between the 2 fibs, we probably were stopped out on that, right? And but see that last wick here would have been probably where I would have looked at that as protection there, right? And then look at the now once we have these 2 points, right? And then we have our 3rd point, we could have, if we entered here, we probably were stopped out, okay? And that's not a problem because if we're still convinced that price will still is going higher, well, then we gotta don't cry in your oatmeal and say, okay, don't go short, We look at, okay, the 618 came into play, right? And let's say we were to enter on a bounce from that 618, and place our stop below the 786. Try it again, okay? Don't sit there and cry in your oatmeal. Oh, this stuff doesn't work. Yeah, because the moment you don't follow through with your analysis and are convinced that Fibonacci's do show reversals at key points. You have to be convinced of that. If you're not convinced of that, and the only way to be convinced of it is to do lots of reps, lots of trades. And after years and years and years, you go, wow, we have been looking at this thing for like 20 years. I think it works. You can do it that way. But in my course, we have a simulator software where students can look and trade 2 weeks, a month of data in about an hour and really develop that hand-eye coordination. And they learn, through spaced repetition. They develop unconscious competency through PDR, practice, drill, and rehearse. Practice, drill, and rehearse. After seeing this pattern over and over and over again in different situations, you'll say, oh, it's bouncing at the 618. Let me pull the trigger on the trade. You're not, oh, I wonder if it's going to go up or down or not. Well, if you're asking yourself those kinds of questions, it means you don't have enough reps to actually be able to look at this market and pull the trigger right away. Because the moment you start thinking and start like doubting, well, this thing is already taken off on you, right? See? And now you've got a move higher, right? And once you clear the high, now you can say, okay, my target, I have a target up here, right? A 2.4 to 1 risk to reward. But I can look back at these other candles here, right? I can see that price. I'm looking at this old low. I'm liking maybe we get there, right? And we or any of this area here, and then price went right to that area, right? Which is pretty cool. However, we might have more juice in this trade, and we can use Fibonacci expansions, another Fibonacci tool, to allow us to project how far price can go and give us some more juice there. So we can use we go to the Fibonacci tool called trend-based Fib extension, right? And we click that. And we need 3 points for that. We take the low, like we just did. We click the high, like we did for retracements. And then we go to the lowest point of the pullback, and that gives us 3 points. And we can stretch that across so we can get big, long lines there. And we can see we went to the 100% expansion. What is the 100% expansion? I'm glad you asked. 100% expansion really takes the move from here to here, like geometry. This line segment, this is the distance, and we take that, we project that, and that's 100%. We take the height of the original pattern from the low to the high, project that out, and whatever that is, right, we can use a measuring tool like 120.96 to 122.95. Well, that's 200, like 200 pips, right? So 200 pips, and you add that to there, and 200 pips added to the bottom here will take us to like 123.79, right? But there's some other Fibonacci expansions too. There's a 1.272 expansion, takes us to 124.38. There's 1.618 that takes us to 125.13, right? And if this is a trend that continues, and this is maybe some type of inverted head and shoulders pattern, that if you zoom out, you can probably see this very clearly. We have our shoulder, and then our head, and another shoulder, right? And then we can see that our expansions, we went to the 1.618 at 125.13, and you can see I'm going to draw a line. I'm going to connect that line. You can see that we magically, voila, we hit that 25.13 expansion, right? And let's say we got from here to here. You woke up in the morning, oh, I missed it. Well, guess what? We can get rid of all this stuff, go back to our fibs, and do it again. Take the last swing low, take it to the last swing high, and we're going to look for a pullback. And then look to enter on a pullback and a bounce. We want some type of candlestick bounce pullback, pullback, pullback. And then look, the 38% retracement. And look, we came right to the 38% retracement, 124.38, right? And we've got a morning star pattern. Well, price breaking down a little bit lower. 50% retracement. Do we get a little bit lower? 618. I'm just going to stretch this across so we can have, So again, Fibonacci is not exact because we got long into 30% retracement, placed our stop on the other side of the 50. Well, guess what? We were stopped out, right? We were stopped out, and you're crying in your oatmeal, this thing doesn't work, these Fibonacci's, I tried it. And then guess what? Look, you got bullish engulfing candlestick pattern, a better, stronger pattern than these. This looked like it was going to make a morning star pattern. It really didn't. And then this is a nice, healthy, bullish engulfing pattern at the 50% retracement. We can place our stop just below the 618 retracement at 123.81, right? And then we look for a move at least back to the old high, right? Or we could look for a Fibonacci extension. We can do the whole extension thing again, right? But let's see if this even works, right? So let's say we got long right here at 24.47, right? And I'm going to actually remove all the drawings there, right? And then we're going to, I'm just going to put our fib back over here, right? And we've got these 3 points, so we can take a Fibonacci expansion and start the whole process all over again. That's what I did last night. I went ahead and reset my fibs, looked at my expansion, and I go, look, we got 25.37 could be a target there, and we got optimistic target, 100% expansion at 126.27. Again, that 100% expansion is equal to the swing low, go from the swing low to the swing high. I'm going to clone that like a sheet, clone it, and take that and attach that to this bullish engulfing. And look, that gives us our second target. First target's the old high, right? I try to get back to the old high. I look left, and I look left, I see, oh, there's an old high there. That's going to be my first target, right? So I'm going to put an ellipse or a circle on that. So I'm looking at getting there, right? 25, and go across, because we can't go back in time. I'm going to go to this level, right? See if it'll go there, and price moves kind of sideways. I got a small bodied doji candle, which looks like a cross, right? Got this cross indecision, right? And at that point, the lower time frame, this is probably some type of bull flag, right? In which buyers stepped in, sellers can't push it down very much. And then, and with each one of these candles is 4 hours, okay? 4 hours, 4 hours, 4 hours. That's, 4 times that's 16 hours, right? And then boom, this decision candle breaks above the high. We had a small, high and tight bull flag range. That's our range where it was indecision. And then boom, we have a break, stops getting hit, right? Shots fired, right? And then we look for a price to continue. Again, we got long here. We're in the profit a little bit. Our stops down there. Will we get stopped out? Maybe, maybe not. Let's see. Price pulls back. We're getting kind of like, oh, what's going on here, right? Price comes back down to the 50% retracement, 124.03, and more indecision candles. Boom, another look. We got that small body consolidation and NR4 narrow range bar formation, narrow range, indecision, breakout. Oh, breakout south side, right? We're going into the end of the month, and it breaks south. Look, and we gap down, right? So it's not perfect, right? It's not perfect, right? Price actually rallied, and then we got long, and then we actually good thing that we did get. I believe this is maybe like a weekend or something like that. So we would have been stopped out, right? For a loss, right? So So what do you do there? You've got price breaking down. We still have, if we look back to our 4-hour chart, it's still an uptrend. So what happened here? We go back to the drawing board, back to our low, back to our last high, stretch it across. And where did we go? Where did we go? Price did drop. One more shot down to the it dropped down to the 1.6 the 618 61.8% retracement. This is like one of the Fibonacci's of last resort. Came back down, healthy pullback, and it landed right on the 618 line, right, and a 50% retracement. And in this case, we have a gap that probably needs to be filled. It's probably a weekend gap, like a Sunday, right? I don't necessarily like trading on Sunday, but theoretically, if we were to get in that, we can place our stop. Our next fib is down here at 2189, and we're at 50. That's like 30 pips. That's a lot. You can split the difference and have a stop 4 or 5 pips below the low, and that would get you down to 122, maybe 44 or so. So let's say we put a stop there and look for that gap to get filled. 43, 44. Okay. So let's see that, right? And then price did fill the gap, right? And now we can move that stop up into the zone here, right? Remember, your position size determines on, at what size position that you're going to take based on how big the stop is and what size your account is. I don't know what size your account you're using, but hey, make sure you use a stop and make sure you use the calculation to figure your stop out, right? Especially because you've got we have this move back, a pullback. We look for the old high. Did we get to the old high? And it did. The old high, the first target, and it was hit, right? On that pullback, exactly to the 618, right? Old high, double top, right? Still have a target 2296, but now we have another established high right here, established low. We want to remove all these drawings again, right? And we just reset. We do the same thing again, okay? We've got an established low here. We connect the established high there. And let's say we took our profit there, and now we're looking to re-enter. Again, we want to re-enter on a pullback to one of these levels. We want to see one of several candlestick reversal patterns at one of these levels, right? So we see price drop down to 38, to 200. And then here is I'm going to stretch this across, right? So here we go again. Price dropped right to the 50%. Actually tagged the 618. Bullish engulfing right there, right? So you get long at 24.41. Stop it. That's a pretty big stop. Again, we're on a 4-hour chart. So again, you adjust your position size. Maybe you're trading like 0.05, right? And this for an example, and then we would have our stop loss there. So let's say we got bad fill, we got filled up there, right? And our stop's down there, and we're looking for an extension, maybe back to 126. That's how we would trade it. We looked at trading this. If this was a smaller time frame, maybe this was a 30-minute. We can do this on 30s. We can do it on, I just did it in a 4-hour just because we can get this view here. But if we have this view, this is the 6th, right? We can drop down into smaller time frames and find fib retracements in that area, right? These multiple time frame analysis. Okay. So then here we go. We got a pullback, consolidation, coming back down, and we need to stretch this out so we can see all of our fibs across the top. So we just go across. We're not cheating. We're just connecting, extending these lines into the future, and we can see how price came back down to that line, that 618, and bounced. And remember, we want to keep our stop on the other side of the last fib that was touched, right? And it's just right. And then we could probably have to. This really went on for a while. But let's say I'm going to put a vertical line here. And if you were a short-term trader, so this is a lot. This is this move from here to here, from where we got like 24. I said what 24.40 2440 to 2479 is 39 pips, right? 39 pips. 39 pips is up. No, that's a good take, right? So let's drop down to maybe a 30-minute chart and take a look at what that looks like, right? Right. So this is a 30-minute chart. Price drop to that Fibonacci. Look at that nice clean 618. There's a lot more detail here on the 30-minute chart. We have big giant push down, small body Harami. Let me zoom in on that so you can see it. Look at that Harami. I mean, this was a full body bearish candle with a lot of strength behind it. Bears are high pawing each other, counting how many K's or berries or honey they're gonna buy, and then boom, small body candle called a Harami. Harami means skin on belly or pregnant pattern. So you got this, big candle gives birth to this baby red candle or a green candle. Now you got a reversal and prices start going up. It's like like a football player fumbling the ball before he walks into the end zone. The guy smacks it out of his hand and runs back the other way. That's kind of embarrassing, but it really takes all the momentum. There's a big momentum shift, right? The game, the fans are all excited. He could go all the not. They knocked the ball out of his hand, and now the guy gets the ball and runs back the other way, and the home team, the home crowd is like, oh, not again, right? There's a momentum change, right? They'll tell you, the announcers will say, whoa, that fumble could really change momentum. The momentum change. The Bears, who were in control, lose control at a significant zone of 618, right? Where the Bulls stiffened up and said, look, enough is enough. We're taking this back the other way. And now we have a nice move moving up, right? If you just saw this and you missed it, you go, oh, Greg, I saw that area there, but I was asleep. I was at work. I was walking my dog. I was walking my cat. I've walked cats before. Cats will walk with you. Surprise, surprise. They don't need a leash, but they will walk. So here's your fib again. You have your established low, established high. Look for a pullback, and you want to do I'm gonna move this out of the way so you can. Okay. So we're looking for a pullback. We want FOMO. We don't want to buy high. We want to buy low. And then here we go. So price did come to 23% retracement, which is a Fibonacci. I'll stretch this out so you can see it. No worries. You don't have to strain. You don't have to walk up close to the TV set. Like, who watches the TV set? One of my fans on followers on the YouTube says, "Yeah, man, I'm watching you on my big screen, right?" Which I thought was really cool, right? So here we go. Pullback, 20% retracement. Got a little bounce to 200 moving average, and then a wick, and then what? We pop. The 30 by 38's right there. Do we get to the 38? Did we get to the 38? Yes, we do. I'm going to extend it. Let's extend it across, right? And look, price tags the 38% retracement, right? So if you missed it, and let's say you said, I don't see a really good candlestick pattern here. This line didn't hold. You're not going to take that. This is not a candlestick pattern on the line. I'm not going to take that. This one, well, I got tweezer bottoms. This is a tweezer bottom pattern. We got two wicks right on the line. That looks pretty tasty right there, right? You go, okay, let's see the next candle. Oh, that's a bounce. I'm going to get long here. So we get long at 24, 25. A 25 line. Hey, Greg, talk about the quarter line thing. 25. All right. Oh, bam. Look at that, man. I'm up 13 pips already, right? Or 12 pips. Big breakout. My stop below the last low. And let's go hunting, right? How far can this go? Well, I remember Greg saying, he said, well, I got an established low here at like the 123.59, and I have this established high up here, and I could figure it out if Greg didn't have this line right here, right? Oh, get out of Mr. Line and move this over here, right? Oh, right there, right? So I got this, so I can take a Fibonacci expansion and see how far this can go. At least I can get 100% expansion. The 100% expansion is going to be tasty. Where this might go. 1 point, 2 point, 3 points. Once, twice, 3 times a lady. Okay, we got the Rhino Itchy there. Rhino Itchy, there we go. So here we go. Oh, the old high first target, right? Our next target is 100% expansion. Do we hit it? It should be a white line somewhere. White lines. Okay, wow, that's way up there. 24, 25, 14. When we get there, that's the 100% expansion, right? And again, the way this math works, I know you guys ditched math, or fell asleep, but you want to you want to love your country, learn math. And that way we don't have to bring in people who are trying to learn, who already know math, right? That if you want to help keep your country strong, make your kids learn math. I made mine learn math. But I know math makes more money. Right? So do we get it? Let's see, do we get it? Price comes up to 618. It kind of hankers around there, 618, and pulls back a little bit back to our entry. And long wick. And it's non-farm payroll day, guys. First week of the month is non-farm payroll. So this is the payroll number. And usually there's low liquidity, and that's why the market moves really wacky with that Darth Maul candle. The 2 double lightsabers, from Star Wars. You got this Darth Maul candle, long wick, stopping out the longs, long wick, stopping out the shorts, right? Or stopping out the longs, stopping up the shorts, reversal. And then finally, like an hour later, you wait, boom, you get a decision candle, right? The decision, I want to take it north. That's not so fast, guy. Oh, and long wick there, right? So non-farm payroll, the first week of the month, you always want to be tricky with that. If you get a big move like that, like if we got long here, right? We didn't get to the target, and the 618 expansion, we got up there, and that was as far as it would go, right? And so what you want to do is, after you get some gains, if you want to move your stop up and lock in. So after things start moving like that, we might would have taken that. Why? Because there's a measurement tool here, a ruler, and if we got in at here and got out, maybe on that red candle, well then, that's 39, that's 40 pips, right? Again, we're getting about 40 pips. We're getting about the average. The average daily range is what, like 200, but we're getting 70% or 20%. 10% of the average daily range, a little lower, maybe 15% of the average daily range, right? And if we can get that, you won't go hungry hitting 40 pips at a time, right? Now, if we try to hold that, I thought that was kind of high. I figured these other Fibonacci targets would probably be a lot easier to hit, right? But again, I use retracements more of an expansions. But sometimes if because I'm usually going to take the meat in the middle, I'm probably not going to try to push it all the way. The old saying, bears get fed, bulls get fed, and pigs get slaughtered. And the moral of the story, don't be a pig, right? So guys, that Fibonacci's are very powerful. And I showed you some uptrend ones. Some downtrend ones are pretty good too. All the dollar pairs are trending down massively, and so when we have a lower dollar, it actually makes exports much less exports more affordable to foreign countries, and that's really good for our export sector. But I'm going to show you a really good where we had a drop and a rally. And we can take a Fibonacci expansion. Well, first of all, let's do the retracement. And we can see that there was a Fibonacci relationship right in here. Our price actually it dropped from here to here. This is we start with at the top, drop them to the bottom, and then the price rallied up to, it came close to the 786. It didn't hit it exactly. Came really, really close, right? And then price started to, fail to make a new high. And so once it fails to make a new high, and we do have like a head and shoulders pattern here, right? A bearish head and shoulders. We have a shoulder, a head, and a shoulder, right? I'm not talking about the shampoo either, guys. I'm talking about chart pattern, right? And what you can do is you can take a Fibonacci expansion 3 points to make a line. You have your 1 point, you connect the low, and you connect the high. And then so now you've got expansion targets, right? And you can see all those. I'm going to drag this across. And you can see that the 100% expansion, right? If we took that, the height of that head and projected it, that's what our first target, 53.55. Then look, we bounced at the 127 expansion, 53.01 expansion. Then the 1.618, we bounced there as well, right? And price can continue to run. It doesn't have to stop at an expansion. You'll run out of expansions before you run out of price. But these are like good areas because, hey, did you want to give back, 20 pips on the bounce, right? And you want to know like how much is left in the trend or something like that. You want to maximize your gains. So, but this is in a downtrend. So what, it bounced there and went right to the next one, the 2.24 Fibonacci expansion. So they just really expansioned out, right? And then we got a double bottom there. And then prices started to hit back the other way. In fact, this double bottom marks the reversal of that trend. The expansion, we went right to the 224% expansion target. We made a double bottom at the 151.03 area. Whole number, round number, 151. Horseshoes and hand grenades, that's really close. In fact, I think we got down to 150.92. A double bottom there. This was the end of this downtrend. And then and that happened on the 7th. And prices reversed from there, right? For a bit, right? To another Fibonacci, right? If we were to take another fib, I'm not telling you a lie, I'm telling you a fib. We go back down to that area, and what's that? The 38% retracement. No, that's not it. That's a fib. I'm gonna remove all drawings there. Remove all drawings, right? Right. So we have any fibs from here to here, right? And we rallied to the 786. So that's 786 rally right there, ended the counter trend, and then we resumed the downtrend and continued to move down, right? So again, Fibonacci's are very powerful when you use them to find areas of low risk, high probability entries, right? In fact, one of mine, I'm still looking at, and it's Friday, but I'm sure that we may continue. I'm looking at the pound dollar again, and we're getting a nice little pullback, right? And I want to get back in there. It was very tasty on the way up, and I want to see maybe during Asia this pulls back down. And let's see if it gets down to one of these areas, right? It passed the 11%, the 23% retracement, 26.47. I'm looking for a bounce somewhere in here for a shot back up to maybe 127 or so, okay? So let's see, right? In fact, usually price comes back to return to the scene of the crime. We have old resistance right there. We're in this really tight consolidation. This range, false break to the south side, break to the north side. Looking for RTTSC, looking for a return to the scene of the crime. The crime was the break right here. I'm looking for price to return to the break at 26.38. And then once we get 26.38, then I'm looking at a Fibonacci expansion. I'm looking at 1 point, 2 point, 3 points, right? And then looking for my 100% expansion will take me to 127.52. We'll see if I'm right? And we'll talk about it next week. Again, I want to thank you so much for being with me and for Fibonacci's, the Fibonacci futures, right? Think of in the chat box, give me a name of this new segment. We're just be talking about Fibonacci. So I think it's a powerful way to find low risk, high probability entries, which you can use on your own charts today. Okay. So if you have any questions, go ahead and type them in the chat box. And also, if you want to take your trading to the next level and to work with me, see what it's like to work with me on a higher level. You can do it on your own. You can DIY it for years and years and years, or you can get faster, better results and step up your game and work with me. So go ahead and type in, hey, teach me in the comments below. and see what that looks like. We're running a great special, going into March Madness. And if you're also interested in our scalping challenge, also reach out to me as well. Yeah, my name is Dr. Greg McLeod, and I do approve this message. And happy trading to you, and God bless you. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!